cash flow statements. Under cash flow statements, of course, we normally find cash flow statements under what we call IAS 7. IAS 7. IAS 7, International Accounting Standards number what year? Number 7. Number 7. Which tells us that all these companies are supposed to do cash flow statements as a primary component of the annual reports. In the reports that we do, of course, we shall be having a statement of financial position of what year, profits and what year, losses, very, very important. Amongst those many statements, there should be a cash flow statement. And in accordance to this IAS 7, these cash flow statements, you can either produce them using the direct method or indirect method. Indirect method. Today, we shall be doing a cash flow statement using indirect method. Using indirect method. And we are doing this question here. It's a question, but very, very important to advanced financial students. So we are doing December 2023, question number 4. December 2023, question number 4. Do we have that question paper by any chance, ladies and gentlemen? Do we, all of us, have access to that paper? At least Rahab has been able to share it live. Rahab has been able to share it live here. So then I'll be able to, myself in this case here, I will be able to do what here to project the question. I will be able to project the question. Thank you very much, Chogo and Rahab. Great. Now, there is one thing that you guys really haven't done for me. I don't know why. You haven't yet called your friends. I'm so sure here we have so many students from various universities. So you have your friends in those groups. Please be nice to your friends. Invite them. Please invite your friends to attend this session. Invite your friends to attend this session. Can you kindly do that before I continue? Like even in our paid groups, I mean, get to your paid group and tell those ninjas that, hey, this is not the season to eat lunch. This is the season. This is the season to study. 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 All right, my good students. All right. So then the question that we are doing here is hereby shared by Mwalimu here. It is a financial reporting question, December 2023, question number 4. December 2023, question number 4. December 2023, question number 4. You can see like now in this sitting, they gave us a group cash flow, not a group cash flow, but a group statement P&L, statement of P&L, a group statement of financial position, very, very important. And in the same sitting, they also tested us this concept of what year? Cash flow. They never miss. They never miss. So what do they want me to do? This is the question here. I'll always start by reading the requirement. So the requirement, what do they want me to do? They want me to give them a statement of cash flows for Bundo Limited for the year ended 31st October 2023 using the indirect in accordance with of International Accounting Standard 7 statement of cash flows. So once I see that, that is a good who is wishing me what year? Success. So our cash flow statement will have 3 areas, 3 sections. The first section will be cash flow, will be the cash flow from operating, cash flow from operating activities. So we have in this case here 3 sources of our cash flows. We'll have cash flow coming from our day-to-day operations. We are selling here. There's a cost of sales there. I mean, our day-to-day cash flows. And then we have in this case here cash flows coming from investing activities. We invest. We've bought shares, for example, of other companies. So you're getting in this case here, for example, the dividends. All right. We are going to buy in this case here, for example, some assets like property, plant, and equipment. We are going to buy intangible assets. So we are investing for our longevity. And then, of course, we have cash flows coming from financing activities. Remember our capital structure for the series that I'm teaching, financial management. Our capital structure, for example, we have equity, debt, preference share capital. So those, how do we raise money from outside there? Whenever we want to raise money, maybe we could float shares. So then that will come under financing. How do we finance our operations? So I would want to start with the first one, which is cash flow from operating activities. Our operating activities will always give us profits. So we need to come and look at profit. We must always start with profit before tax. So you have profit before tax, and then you say adjusted for, like that. You say dial God's number for food. Dial God's number for food. Or you rest in peace totally, indefinitely. I don't know if they're able to see up to here. Very, very important acronym that works across. Whenever we talk of cash flow from operating activities, we normally talk of profit before tax, and then you adjust this for, use this acronym. You dial God's number for food, or you rest in peace totally, indefinitely. All right. So this D stands for depreciation. We have impairment of intangible assets. We have here amortization, rather impairment of assets, amortization. We have here loss on disposal, gain on disposal when you dispose assets. All right. This is the finance cost. This stands for working capital. You write here, working capital changes. So we have here receivable. Under working capital, we have what we call receivables. We have in this case here inventory. We have here payable. We have here tax paid. And then we have what we call interest paid. Can I get to know, once you guys are able to write up to here, this should be a title. Can I get to know, once you guys are able to write up to here? I mean, this is a very important acronym that has assisted thousands and thousands of students that I've taught before. You dial God's number for food, or you rest in peace totally, indefinitely. And once you guys write up to here, please let me know. Problem today, I don't know, for whatever reason. Perhaps there is somebody who doesn't have their money for lunch today. Today you guys are not happy. You're not even talking to me. You're taking too long to write. I don't know why, but we shall overcome. Or perhaps my board may not be very clear. I hope my board is very, very clear. Done. Thank you very much. And then now you slot in the things here. Come and slot in the things here. Look at the income statement. Given in this December. For those of you who have got these revision kits, RCM's revision kits, of course, you go to page number 75, financial reporting. However, this financial reporting. So we are given here a statement of comprehensive income for the year ended 31st October 2023. Then are you able to see somewhere there profit before tax? Is anybody who is able to see the profit before tax of 13,870? Anybody who is able to see profit before tax of 13,870? Profit before tax of 13,870. Anybody who is able to see that, please. Maybe they don't have the question paper. I even have it. How comes I forgot about it? I have it. So I have the question paper here. So, it's about just lotting here. So remember, this is the question paper. We're given the following information was extracted from the accounting records of Bundo Limited, a public limited company. So what I'm interested in, ladies and gentlemen, here will be, the profit, in this case here, before what year? Before tax. Profit before tax, profit before tax. I'm picking profit for the year. It's good I shared this. Profit before tax is 18,700. Is 18,700. It is 18,700. Thank you very much. It is 18,700. That is the profit before taxation. That is the profit before taxation. So profit before taxation is 18,700. Profit before taxation is 18,700. Now from there, you continue now reading this thing to get the other information. So what have they told me here, ladies and gentlemen? You can see here, we have accumulated depreciation. This is very, very important to me. End of 23, it was 19,800. End of 22, it was 12,600. So I can see the increase. Let me just read further here. I'm told during the year ended 31st October 2023, the property was revalued upwards for a gain amounting to 1,200. Yeah, I'm cutting 3 zeros because you can see they're cutting 3 zeros as well. The company does not make any transfers for excess depreciation upon revaluation. However, it accounts for deferred tax on revaluation gain. The income tax applicable to Bundo Limited is 30%. Depreciation on PPE has been charged to profit or loss. Ladies and gentlemen, the accumulated depreciation at the end of 22 was 12,600. And we can see that this depreciation grew to 19,800. The growth in this depreciation will be the depreciation for the current year. So the depreciation for the current year will be 19,800 minus 12,600. So in this case here, under depreciation, we are taking 19,800 minus 12,600 minus 12,600. Because remember, the depreciation that I'm working with here should be the depreciation for the year. Depreciation for the year. Yeah, we're making yearly adjustments here. So in this case here, by the end of 23, it was this. By end of 22, it was this. So that increase, then automatically this will be 7,200. This is what you charged to the current year's profit and loss, 7,200. 7,200. 7,200. Thank you so much, 7,200. Ladies and gentlemen, after that, we just continue reading here. I'm looking for operations. We are told, note number 2, during the year ended 31st October 2023, Bundo Limited acquired some patent rights at a cost of what year? 5,000. Any amortization of intangible assets has been included in administrative what year? In administrative expenses. Ladies and gentlemen, then I will be able to track down my intangible assets. I'll go to the balance sheet and track down my intangible assets and see how this has been accounted for, this 5,000, which in this case is a new intangible asset that we acquired. This 5,000. So then go to your balance sheet, go to your statement of financial position and look for intangible assets here. You can see intangible assets here. I can even do a T account, although myself, I hate T accounts so much. But I know for me to be able to get started, let me just introduce you to this through the T accounts. So I can see intangible what here? Intangible assets. So the 2022 is the brought down. Remember, 2022 is the brought down. 2023 is the carried down. So this being an asset, I know that this intangible 23,680 will be debited, because of course this is what here? This is an asset you debit. So we have here balance brought down. So balance brought down. So balance brought down, ladies and gentlemen, that I have here in my intangible is 23,680. It is 23,680. And then I have balance carried down. Balance carried down, ladies and gentlemen, I have here 24,290. And then I'm told within the year, we acquired some intangible assets here. So we acquired a new patent. A new patent in terms of thousands was 5,000. All right. So you can see, ladies and gentlemen, then by the end of the year, my intangible assets should be 28,680. But in this case here, I can see it has reduced. So the reduction must be what was amortized. Amortization. To that, I would have called it depreciation if it was a physical asset that you can touch. But you see, this is an intangible asset. So intangible asset, loss in value or loss of value, we call it what here? Amortization. So this is 28,680. This is 28,680. So are you able to give me this amortized amount? Is there somebody who is able to give me this amortized amount, my good students? The amortized amount. Anybody who is able to give me this amortized amount? Because you're taking this 28,680 minus 24,290. Minus 24,290. Yeah, I can see from Joanne, 4390, right? So this 4390 is then what I will bring here. 4390 is what I will bring here. Amortization, 4390. Thank you so much. Amortization, 4390. That is what I will bring here. So up to here, ladies and gentlemen, are we together really? Are we together up to here? Are we together up to here somehow? Are we together? Are we together? Are we together? Can you mention their wife or yes? Are we together? Are we together? Or am I too fast? Are we together? Please try to communicate. It's very, very important to communicate. Yes, yes. All right. So intangible assets, although if I'm the one who was doing this, in terms of intangible assets, I would have taken the opening balance. You take the opening balance plus the new that you have added here minus closing. I would have easily gotten that amortized amount. So I would have said opening is 23,680. I add anything new that I acquired, 5,000 minus closing of 24,290. I would have easily gotten that figure without doing this T account, without doing this T account. But for now, at the very beginning, we must rely with those T accounts. All right, ladies and gentlemen, I will come to the next working here. Next additional information note. So I'm told note number 3, the company repaid some borrowings which had matured during the year and issued new loans amounting to what year? Amounting to 3 million. Now please, ladies and gentlemen, listen to me very well. When you look at the entire question, there is nowhere they are telling us that we disposed an asset. Nowhere they are telling us that they disposed an asset. There is nowhere they are telling us that they disposed an asset. So no loss on disposal, no gains on disposal. Then here, the finance cost, we normally pick the finance cost given in the profit and loss. The finance cost, you pick the finance cost given in the profit and loss. Are you able to see any finance cost given there in the profit and loss? You pick it the way it is. So finance cost in the profit and loss, is there somebody who is able to see 3,800? Finance cost in the profit and loss, you pick it the way it is, 3,800. You pick it the way it is, 3,800. Then you come in this case here to working capital changes. Working capital changes, these are free marks. Why are they free marks? Because it is all about saying O minus C. This is payable, a liability. You say O minus C multiplied by -1. Because being a liability, you must change it. O is opening. This is closing. Opening minus closing. So you look at the balance sheet, the 2 years, opening figure for receivables minus closing figure for receivables. What do we have, ladies and gentlemen? When you look at receivables, for example, from the balance sheet, so from the balance sheet receivables, you can see receivables here. Ladies and gentlemen, you can see them here. Remember, the first year is your opening. So receivables, you can see it's 4290 minus 4070. So receivables, I'm just doing this separately. So receivables, I will take 42. They're saying it's 4290 minus 4070. 4290 minus 4070. So is there somebody who is able to give me that difference? Working capital change. the working capital change. What do we have there? Working capital change. Is it minus 220 or positive 220? Is it minus 220 or positive 2? Is it minus 220 or positive 220? Or positive 220? Is it minus 220 or positive? It is positive, isn't it? It's positive, right? It is positive. So remember, when you use this concept of O minus C, you shall not be making an argument that receivables have increased. No, no. If you get positive, you write positive. As simple as that. 220 positive. Then you go in this case here to inventory, you do the same. It's a working capital change. So you go to inventory. So inventory, what do we have here under inventory? So what we have under inventory, ladies and gentlemen, what we have under inventory, ladies and gentlemen, what we have under inventory, ladies and gentlemen, inventory, we have here 5760 minus 5880. So under inventory, we have here inventory, it will be inventory 5760 opening, 5760 opening minus the closing, 5760 opening minus 5880. Minus 5880. If I get, like now I can see I'm going to get a negative, I'll write that number the way it is. I'll write that number the way it is. I will write that number the way it is. This is the good thing of cramming or working with this approach. You write it the way it is. Then you go to payables. Remember, working capital changes, there are three. We go to payables, you do the same. So payables, you shall do the same. So payables, opening minus closing. Opening minus closing. Payables. So payables, what do we have here? I can see my payables here under liabilities. So I can see 8200 minus 7800. 8200, but now remember, payables, this is a liability that has to be interpreted in the opposite way. This is a liability that must always be interpreted in the opposite way. So you take payables, you take that number the way it is, but you multiply this with all liabilities. All liabilities shall always be multiplied with negative 1. Negative 1. All liabilities. All liabilities shall always be multiplied with negative 1. So what are we getting? Somebody there after you multiply with negative 1? Is there somebody who is able to see negative 400? Is there somebody who is able to see negative 400? Yeah. All, like now, if I were you, I would cram able multiply that I get, I will multiply with negative what here? Negative. Otherwise, the other option that you have is where you start now making those arguments. Where you start making those that you see now the payables in this case at the beginning, they were 8,000. At closing, they are 8,700, 700, meaning that we've paid them. Paid. So it'll be cash flow. So then after this using, but those arguments, you don't have that luxury. This is a question that you should do in 37 minutes. Have mastery of some concept that can be the best thing for you. All right. That argument of making like now here, like receivables have increased that now we should be able to do this. No. Use OC concept. And for liabilities, OC must always be multiplied with negative 1. OC must always be multiplied with negative 1. So up to here, ladies and gentlemen, are we really together? Are we together? Because once you know, this is a great gift that I'm giving. Great gift. Cash flow statement, knowing cash flow statement already, I've gotten a whole burden out of your way. Are we together? I'm not getting very many responses, but we shall overcome. A few students say about the other students here. Please, there is a problem with my speed, or if there is some always ask a question, they call me, oh, I'm breaking. Somebody is saying that I'm breaking. How about now? Are you able to hear Mwalimu well now? How about now? How about now? Iko sawa, eh? Okay, great. Thank you for that. So then we continue now. So then we come to tax paid is the easiest. Knowing how much I've paid, ladies and gentlemen, is really a very, very thing. Tax paid, this is really easy thing. Tax. Are you able to see the taxes really? Is there somebody who is able to see the taxes there? Is there somebody who is able to see the taxes? Go to your balance sheet. Go to your balance sheet. When you look at your balance sheet, ladies and gentlemen, see the taxes, and normally they'll give you current tax. Here you can see current tax, and they'll give you deferred tax. We consolidate them. Do a T account. Do a T account. I'm so sure you guys love T accounts, and I know you love T account. So do a T account. Let's do a T account. Let's do a T account. So the T account that we are doing here is for tax payable. So we start with a deferred tax, current tax, deferred tax. You combine like that. All right. So in this case here, brought forward. Remember, this is a liability. Liabilities you always credit. Your balance brought down, you credit. So in this case here, remember, brought down is 2022. 2022. So is there somebody who is able to see the current tax here? Yeah. So what do I have, ladies and gentlemen, here? Yeah, I can see the CT, the current tax for 2022. It was 5570. Current tax is 5570. Current tax carried down for the other year. Current tax carried down for the other year is 4230. 4230. Then we have deferred tax 2022. Deferred tax 2022 is 7070. 7070. Deferred tax 2023. Deferred tax 2023 is 6750. Like that. All right. So then once you do that, what will follow? Once we do this, ladies and gentlemen, here we have the balance carried down, balance brought down. Remember, this tax payable will increase by the tax that you have in the P&L. So tax P&L. That is tax for the year. Tax for the year. Are you able to see the tax for the year in the question? There's somebody who is able to see the tax for the year in the question. Go to the P&L. Tax for the year in the question. Yeah, you can see the income tax expense. Income tax expense, what are you able to see? Oh, yeah. Income tax expense, are you able to see the income tax expense of 4830? And then there is something, remember we are mixing this account. We are mixing deferred tax and current tax. Then you have to be very careful. But you have revaluation of PPE. Whenever you have revaluation on PPE, the PPE was revalued upwards. Again, amounting to 1,200. The company does not make any transfers for excess depreciation upon revaluation. However, it accounts for deferred tax on revaluation gain. The income tax rate applicable to Bundo is 30%. Depreciation on PPE has been charged. Okay, sorry for that. Sorry. I think also this Starlink now has started giving us issues, because we thought once we got Starlink, it's like now we have really solved all our internet problems. But now, are you able to hear Mwalimu now? Am I back? Okay. Okay, great. Sorry for that. So you see the tax, the P&L. Were you guys able to see how I picked this tax for the year? Were you able to see how I picked tax for the year from the P&L? Tax for the year from the P&L? Yeah. So then the only thing we need is deferred tax on revaluation. Deferred tax on revaluation. On revaluation. Which will be 30% of the revalued amount, 1,200. It is tax times the revalued amount. It increases your deferred tax liability. It decreases your increases your deferred tax liability. I hope I was reading this. Yeah. You can see in this case here, there is a revaluation of 1,200. All right, revaluation. And the rate of tax is 30%. So then can you kindly give me this figure? 360. So this is 360. And that is it. So then come and give me the Balancing figure. I don't know which side is heavier. I don't know which side is heavier. I don't know which side is heavier. Of course, it will be this side. Please add for me everything to be this side. 5570 plus 7070 plus 4830, 17830. So 17830, 17830. The balance here will be tax paid. Tax paid. So in this case here, you credit your bank. It will be 830 minus 67, 40, minus 4230. Minus 4230. They are getting a figure. They are getting a figure there. They're getting a figure of 6850. They're getting a figure of 6850. 50. It's tax paid. So if it's paid, of course, it will be 60 or negative. You put this in brackets, or you put this in brackets or negative. And then now you'll be able to go to the interest paid. You'll be able to go to the interest paid. And you guys have been able to understand what I know for the number of years I've marked CASNEB exams, what I know for the number of years I've taught this CASNEB's paper, ladies and gentlemen. Very few students are able to, first of all, combine the two accounts. Whenever it comes to tax payable, you should be combining current tax and deferred tax. And then when they combine like that, they forget two key things: to increase the tax liability with the current year's tax. So you go to the P&L and pick that. And then number two, like 80% of the students will not remember the impact on revaluation on the deferred tax. Very, very few students are able to remember the IAS 12 income taxes. You know, problem with CASNEB students, they don't invest in knowing standards. They in knowing standards. But I believe with this explanation, maybe when I do one more question, then you guys will be comfortable. So are you okay now with this? Can I move on to something different? How are you okay with this somehow? Please try to talk to me. I'm your father in the industry. I'm your father in this. I'm your chief ninja. If you're not following, tell me you are not following, and I'll be able to help. T account haina marks. Haina marks. Haina marks. Haina marks. Totally. No marks totally. That's why later on, you'll be able to see mwalimu will not be using the T accounts totally. Interest. Interest paid, track your interest. So come here and track your interest payable. Go to your balance sheet, and then you get to track the interest payable. Go to your balance sheet, see how interest behaves like. So here, you go to see interest payable. So at the beginning, 2022, you had 4,800. 4,800 at the beginning here. Interest was 4,800. At closing, it is 3,500. Closing is 3,500. Very easy. We ask ourselves, ladies and gentlemen, whether in the year, during the year, did we have any interest expense in the income statement? So you come to the income statement and look for finance cost. Finance cost. So finance cost, in this case here, I'm being given a figure of what year? 3,800. 3,800. Here, finance cost. This is interest expense for the year. 3,800. So we have here 3,800, like that. Finance cost. P&L. That is it. This is a balance brought down. This is carried down, like that. So then come and add. When you add, I think this will be 8,600. This will be 8,600. So it means that our total interest by the end of the year should have been 8,600. But we can see straight away it is much less. So what does that mean? That we paid something. We paid. So in this case here, bank with interest paid. Somebody is telling me it's 5,100. So interest paid is 5,100, like that. Interest paid is 5,100, like that. So the interest paid, I'm being told here, interest paid is 5,100. All right. So do we have everything really there? Yeah. I think so. I think so. I think so. So then come and give me the net cash flow from operating activities. Give me the net cash flow from here. You take this plus this plus plus plus. These others are negatives. So give me the net cash flow. Give me the net cash flow from operating activities. Net cash flow from operating activities. What do we have? Somebody add them. Add this up. Rahab is giving me a figure of 21. Rahab is giving me a figure of 21. Somebody has confirmed up there. Thank you so much. So we have here 21,840. 21,840. Now, once I finish this, the other sections do not have issues. The other sections are very, very easy to handle. This normally is the one that takes time. So as I go to the investing activities, do you like my acronym? Do you like my acronym for getting operating activities? My acronym today, when you go back to your workplaces, you should be able to show people that you have known how to do this operating activity using an acronym. That is dial God's number for food, or you rest in peace totally indefinitely. Totally indefinitely. Totally indefinitely. Totally indefinitely. This is really a game changer. This is a game changer. There is somebody in this case who was trying to tell me that, Mwalimu, if you want to make it very well, talk of dial your girlfriend's number. No, no, no. That will not really be very, very good. No, 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 no. It's God. It's God. God in this case here comes in very, very well here. But there is a ninja somewhere who was saying it in a very funny way, which also was very, very interesting. But now, as a chief ninja, I'm not interested in that. All right. Now, ladies and gentlemen, we can now go to investing activities. So we are now through with the first part. Don't rub yours. Don't rub yours. Now come and mention there for Mwalimu, the second part is cash flow from investing activities. Normally for the financial reporting, cash flow statement is a very useless statement. Oh, Lucy, I'm not getting your question there. I'm not getting your question there. Now, this is normally very, very, really basic. For AFR, it's a bit advanced, although you need this base you need these basics here. Because like now in this question, I can even tell in this particular, what were my investments here? Here, I only have two investments. The first investment is that I bought in some intangible asset. I brought in some brand. If you remember, the one that we amortized, that's an investment. Let me just share this. That's an investment. You can see, ladies and gentlemen, here, we are told here, during the year 31st October 2023, Bundo Limited acquired some patents, yes. So in this case here, we bought some patents here, intangible assets bought. That's an investment, intangible asset, which is, in this case here, a patent bought. And if you remember very well, it was 5,000. It's a cash outflow. It's a cash outflow. It is a cash outflow. It is a cash outflow. The format, yes. The format has a mark, yes. The format has a mark. Ladies and gentlemen, after that, the other investment I'll think about is the property, plant, and equipment. So come and give us property, plant, and equipment. Property, plant, this is an asset. So I'll say balance brought down here. Balance carried down here. So track this in your balance sheet. Property, plant, and equipment. Track this in your balance sheet. Track this in your balance sheet. Actually, it's even given here. You can see the property, plant, and equipment were made as follows. You can see 2022, the brought down is 113,600. The brought down is 113,600. The brought down. 113,600. And the carry down is 118,400. Remember, you work with net book values. If you want to do your PPE very well, always work with your net book values. So we have 113,600, 113,600. So we have 113,600, and then balance carried down. 2023 is 118,400. Is 118,400 like that. 400 like that. And then, ladies and gentlemen, remember what makes these assets go up? It's either through revaluations or we purchase new ones. Like now here you can see we are told during the year ended 31st October 2023, the property was revalued upwards for a gain amounting to 1,200. Remember the figures are in shillings thousands, eh? So I'm cutting. So you'll come and tell us, yeah, revaluation. So you debit this. Revaluation will increase the amount 1,200. And then perhaps we purchased. So we have in this case here, new assets purchased. New assets purchased, which they haven't told us. They haven't told us the new assets that were purchased were worth how much. This is what they would want us to calculate. This is their abracadabra, right? Now, what makes in this case here the PPE in this case here do what here go down, the value go down? Depreciation. And if you sell PPE items, in the question there is nowhere they told us that we sold. So the only thing we can come and account for here is depreciation. And fortunately, we know that depreciation is 7,200. Remember, we take depreciation for the year, 7,200. So are you able to give me the balancing figure? The balancing figure is what will come here. The balancing figure. Is there somebody who can add this? I think I took this so far. Balance, brought down, carry down. 18,400, 118. So is there somebody who can give me this? 118,400 plus 7,200? So in the interest of time, because I must finish, 125,600. So this is 125,600. This is 125,600. So are you guys able to give me the balancing figure here? It will be 125,600 minus 1,200 minus 113,600. 125,600 minus 1,200 minus 113,600. What are you guys able to get? So I'm being given a figure of 4,800. I'm being given a figure of 4,800. Is it 4,800 or 10,800? Who's telling me the truth? 10,800, eh? So I'm being told it is 10,800. 10,800. So come and tell us something to do with these tangible assets. So tangible assets, the PPEs, bought. So we bought this, so it has to be in brackets, remember, because assets came on board, money went away. So I'm crediting my bank. I'm crediting my bank like that. And that is it. So that is the end of there is nothing much really. When you tell me that you don't know cash flow statement, especially the ones which come in financial reporting, I normally laugh at students. Here you should be able to know everything. This is very easy. You can even do it with your eyes closed. So can somebody give me this total? So this total will be 15,800. 15,800 like that. 15,800 like that. And then, ladies and gentlemen, with your permission, I'm moving back a bit fast because I can see now time is not on our side. With your permission, now I will be able to go to cash flow from financing activities. Cash flow from financing activities. Cash flow from financing activities. Up to here, somehow I have to add ink to my pen a little bit, but up to here, are we together somehow? Now, the finance, I will not forget. This one, this case told me ACCA. It was Mzungu who taught me ACCA financial reporting, and I've never forgotten what he told me about this financing. He told me that, that your biggest financiers are your shareholders. Give them dividends first. Dividends paid to shareholders. Dividends paid to shareholders. Pay them. And how do you get to know the dividends paid to shareholders? You track retained earnings. You track retained earnings. you track retained earnings account. You track retained earnings account because you see there is a relationship between retained earnings and the dividends. You know, when you make your profits, right? It's either you retain and give out some dividends. So go to your retained earnings. Is there somebody who is able to see retained earnings in their balance sheet? Anybody who is able to see their retained earnings in their balance sheet? So in their balance sheet, retained earnings same as retained profit. Yeah, so you can see the balance brought down is 42,400. Remember, retained earnings and equity, it has to be credited. So balance brought down, balance brought down, balance brought down for retained earnings, which is the same as retained profit, is 42,400. And then we have balance carried down. So balance carried down for retained earnings. What do we have here? Balance carried down for retained, it's 52,770. 52,770. And now, ladies and gentlemen, remember that these retained earnings will always increase because of the profits that we make in the year. So you come and give us here profit for the year. Profit for the year. The profit for the year. So go to your statement of comprehensive incomes and then you pick profit for the year. Gabriela has a problem hearing Mwalimu. Are you able to hear me now? Abracadabra. Or they are able to hear me. So in this case here, profit for the year. So are you able to see the profit for the year? Let's check out. Go to your income statement and see the profit for the year. Profit for the year. In the income statement, what is the profit for the year? This one here. So profit for the year, leave this comprehensive whatever. It is profit for the year. The profit after tax is 13,870. 13,870. 13,870. And then you balance your accounts. Now balance your accounts. You balance your accounts. So balance your account. Oh, I think there is a problem with my sound. So in this case here, the bigger one is 56,270. 56,270. 56,270. So this is what we expected to be the retained earnings at the end. But you see the retained earnings at the end were 52,770. It means they paid something. They paid dividends. They paid dividends. So dividends paid. Dividends paid. Dividends paid. How much? How much dividends were paid? How much dividends were paid? How much dividends were paid? 3,500, right? 3,500. 3,500. So that's the first thing that you do. Under financing activities, you must always remember to pay dividends to your main supporters. To your main supporters, you must always remember to pay them what year? To pay them dividends. You must always remember to pay them dividends. So up to here, ladies and gentlemen, somehow, are we really together? Up to here, somehow, are we really together? Somehow, are we together up to here? I only have 3 minutes and I'll be able to finish within those 3 minutes. Now, from there, ladies and gentlemen, go to your shares. Go to your ordinary shares. So if you look at your ordinary shares account, go to your ordinary shares because those belong here. You know, we have debt and equity. So we look at ordinary shares. So ordinary shares and a premium account. And a premium. You combine and a premium account. You combine them. So it's an equity, so balance brought down here. So start with the ordinary share capital. And then we have share premium. Very fast. So in this question, are you able to see the ordinary share capital from the balance sheet? From the balance sheet, is there somebody who can see the ordinary share capital brought down 32 something? 32,000. 32,000. This ordinary share capital brought down. How about share premium brought down? If you look at down there, you can see 2,600. 2,600. And then you come and bring things down here, carry down. Carried down. So under carried down, we have ordinary share capital. So ordinary share capital carried down, you can see there 2023, it's 40,000. It's 40,000. And then we have share premium. Share premium. Share premium. What do we have here? Share premium, ladies and gentlemen. Share premium. We have 3,000. We have 3,000. All right. Now, ladies and gentlemen, apart from that, what else in this case here are we told? What else are we told? Remember, there is a place they told us something very, very important. Very, very important. Let's see. Let's see. Is there a place where they have told us that we issued new shares? Any place they have told us that we issued new shares? Abracadabra, new shares. Is there any place they are telling us that we issued new shares? Abracadabra. Ni kama hakuna. Note namba ngapi? New shares. Note na ngapi? Tuambie. Tuambie. Note number 3. These are new shares. The company repaid some borrowings which had matured during the year and issued new loans. Those are loans. Those are loans. Those are loans. Those are loans. So then, ladies and gentlemen, what you need to do here, just come and balance your account. Balance your account. So here I can see this 43. There are no new shares which were, for balance your account. Balance your account. So when I balance my account, I can see this side is bigger, this side is bigger. Then this will be for 3,000 minus 2,600 minus 2,000. Can you give me something here? For 3,000 minus this minus this. Can you give me something here, ladies and gentlemen? Somebody give me something here. What is the balancing figure, ladies and gentlemen? 8,400, isn't it? So this 8,400, of course, this is bank. This is the money I received. So it means that this was what here? A new issue. A new issue. This was a new issue. If, for example, the balancing figure was to come here, it would have been what here? Somebody, a share redemption. So in this case here, we have here new shares issued. New shares issued. So new shares issued, we have 8,400 positive because we received the money. We received the money. So new shares issued, 8,400. New shares issued, 8,400. That's why we credited this account and then we debit our bank. Now from there, ladies and gentlemen, track your debt. Track your debt. So I would want to see the debt instruments. So track your debt, because if you look at the capital structure, our capital structure, we have equity. We have, in this case here, what here? We have debt. Equity, we must look for new shares either given out or even redeemed. We must get, in this case here, the debt instrument. We must know whether we issued new loan notes. All right. All right. So in this case here, debt, it's quite a simple thing. For debt, it's quite a simple thing. So this debt, I would want us to do a long-term debt account. So long-term debt account. Do we have this long-term debt? Do we have this long-term debt? Yeah, if you look at, in this case here, your balance sheet, there is a place they have given us. There is a place they have given us long-term borrowings. So long-term borrowings, I can see 46,800. Wrote down here is 46,800. Carried down, ladies and gentlemen, for these long-term borrowings, 37,550. 37,550. All right. So this is brought down, and this is carried down like that. And then in the year, we are told that we issued new loan notes. Are you able to see note number 3, where they're saying that the company repaid some borrowings which had matured during the year and issued new loans amounting to 3,000? Are you able to see that note, ladies and gentlemen? Is there somebody who is able to see that note? We issued new loan notes. That must come to, so in this case here, we have new loan, 3,000. So it means that now the balancing figure will be what we paid. So this is 49, this is 49,800, this is 49,800, 49,800. So in this case here, bank with the paid. Because we are told that we paid, but they're not telling us how much we paid. They're not telling us how much we paid. They're not telling us how much we paid. So is there somebody who can tell me, ladies and gentlemen, this long-term debt, how much did we pay? This long-term debt, how much did we pay? Somebody talk to me. Somebody talk to me. 12,250. Chogo is getting 12,250. Chogo is getting 12,250. Somebody should 12,250. Yes. So this is what I put here. Now here you have to be very, very careful. So we have in this case here loan paid, loan paid. So loan paid in this case here is how much here loan paid. In this case here is 12,250. So loan paid, of course, you put brackets. But you see, we also received a new loan. Loan received because of new notes, new loan notes, new loan notes. This one here, so many guys will forget. So the new loan note gave us what here? Gave us 3,000 like that. So here we are looking at loan. For loan under financing activities, you must tell us in this case here, how much did we receive? And how much loan did we pay? So then is there somebody who is able to come and combine here and give us in this case here cash flow from financing activities? Cash flow from financing activities. Anybody who is able to do that? I'm finishing in the next 2 minutes. 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 So is there somebody who is able to tell us, ladies and gentlemen, from these financing activities, how much do we have in total there? How much do we have in total there? 21,150 negative. So remember, this is 3,500 negative plus 8,400. Remember, this is positive. 8,400, we issued new shares. So we received this money minus 12,250 because the loan paid, and then we received. So you add 3,000. You add 3,000. Yes. So now, Chogo, please work it out very fast. We should be able to see whether our cash flow is balancing. We should be able to see whether our cash flow is balancing. And then remember, your examiner is very lenient. You don't have to do it accurately like Mwalimu. No. You don't have to do it accurately like Mwalimu. You don't have to do it accurately like Mwalimu. No. So remember, issue of new shares is 8,400 positive, right? We have dividends paid to shareholders. Dividends paid to shareholders is minus 3,500. Then we have in this case here 3,000 as a positive. And then repayment of long-term loan, 12,250, is supposed to be negative. It's supposed to be negative. I don't know why they're getting different answers. Remember, in your calculator, you say minus 3,500 plus 8,400 minus 12,250 plus 3,000 plus 3,000 plus 3,000 plus 3,000. So now they're getting minus 4,350. Yes, minus 4,350. So, and that is it. So come here and they give us increase in cash and the cash equivalents. And the cash equivalents. Increase in cash and the cash equivalents. So here you take operating, you say plus cash flow from investing plus cash flow from financing. You add the three. At least investing, I can see investing, it's minus 15,800. I can see financing is minus 4,350, but for sure I've forgotten operating. What was the operational? Operating, is there somebody who is able to remind us what the operating was? Operating. We have done this operating together. Anybody who is able to remind Mwalimu what this operating was? Anybody who is able to remind Mwalimu this operating, what was this operating? This operating was 21,840. Thank you so much. So can you kindly add these three? Add this. So you take this, minus this, minus this. You give me what we call increase in cash and the cash equivalents. Increase in cash and the cash equivalents. Increase in cash and the cash equivalents. Chogo has been very, very attentive. He's getting 1690. Can somebody confirm that Chogo's figure is correct? Can somebody confirm that Chogo's figure is correct? 1690. Thank you very much. So then once you get this 1690 as your cash and cash equivalents increase, then you shall be able to bring forward the opening cash. So in this case, you say add opening cash and the cash equivalents. Opening cash and the cash equivalents. Opening cash and the cash. Go to your cash flow, not cash flow, but balance sheet. Balance sheet. go to your balance sheet. So in your balance sheet, what are you able to see, ladies and gentlemen, as your cash? So in your balance sheet, you can see cash and cash equivalents brought forward. It is 4670. Brought forward is 4670. Brought forward is 4670. 4670. 4670. So can somebody in this case here add for me this figure? And when you add, then you should be able to get closing, cash, and the cash equivalents. Closing, cash and cash equivalents. Closing, cash and cash. But I've seen the question else I'll be able to post it. But can somebody in this case here give me this closing, cash and cash? So you take this increase plus the opening, So you're getting 6360. Is it balancing? 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 Are we getting 6360? Oh, yeah. Great. So you can see, ladies and gentlemen, in this case here, our cash and the cash equivalent for the following year is 6360. Let's clap for ourselves. I mean, ladies and gentlemen, we have done great. This 1 hour you have used this 1 hour very, very efficiently. Let's clap for ourselves. In Zoom, there is a place where you clap for yourself. So remember cash equivalents, for example, when you go to your current assets and see things like fixed deposits. We have things like short-term investments. All those will add them up with what year? With your cash and the cash, with the cash which you have. Cash equivalents, these are basically those particular assets that you can liquidate very fast. Like the fixed term deposits, you can go and liquidate like that. Can this class be uploaded? I don't know which forum. Maybe I upload it on YouTube. Yes, I will upload this on YouTube. And then remember, nowadays I've started, I stopped teaching AFR a long time ago, but nowadays I've started teaching financial reporting. And the one who is teaching financial reporting, the 6 p.m. financial reporting at RCM, I'm the one who teaches this. If you're interested with our financial reporting classes, of course, we have got many teachers. Like we have a very wonderful young man who teaches early morning. All right. We have in this case here, very good teachers. So we have early morning classes. We have my class here, 6 p.m. And then we have the 8 p.m. class. So if you're interested in joining us, you need to call this number, 0719 525,000, and then you get access to premium training. This kind of format is a format that most of you have never seen anywhere else. You are seeing it here. So many students struggle with cash flow statements. You saw one guy here who said, Chogo, that he did this paper, but he never attempted. This question, but he passed, right? That's the good thing with the CASNEB. So had he known the question, chances are he would have gotten a reward. Or an award. Yeah. So please, I'm looking forward to teaching you. So I'll be able to upload this on YouTube. Please, my YouTube channel is Joshua Aura. It has 30,000 followers, and I'm so sure you'll be my next follower. So you should be able to subscribe. So that whenever I upload great content, you guys are able to do what here? Yeah, I will be able to put it there, Elizabeth. Immediately after this, I'm putting there, and please support Mwalimu. And then now remember, we are giving what we call RCM HELB loans. Like now, students are applying for HELB loans for next year, right? That is 2025, first semester, January to April. This is what students are doing, right? So they're giving, like I've seen now, the students who have applied, most of them are getting allocations of 60,000 for RCM fees, 45,000 others, depending on how you argue out your case, right? If you get 60,000, you're charging about 5,000 per paper, per term. So that means 3 papers will be 15,000, right? So 60,000 will be able to stand in for you for 4 great semesters. Please utilize this money before because I know, CASNEB, they're not getting like government exchequer. I'm so sure right now when they have hit like 300 million, now they're outside there calling for students to take the law. So before they are extinguished, and of course, if you're in financial need, don't take it if you're not in financial need, right? and ensure that you take these loans quite in early. And if you have got friends outside that would want to do CPAs, ATD, these guys are paying for their registration fees. They are paying quite a lot of exemption, examination fees, and school fees. To take a photo. Okay, great. So if you're interested with this help loan, please, this is the number you call 0793 555 000, like that. 0793 555 000. Otherwise, it has been a pleasure hosting you. In the evening, I'll be having advanced financial management remedial class. I'll be inviting those of you who are at the advanced level. You saw dust, okay? But now, Elsie, I believe after doing this, if you get this kind of a paper, Elsie, now you'll be able to do something, isn't it? If you get this kind of a paper now, if you get this kind of a question, Elsie, do you agree now you'll be able to do something? Yeah. If you got it, I'm 100% sure you'll be able to do something. Otherwise, thank you so much. Be blessed. Bye. Bye. Yeah. Bye. And I'm happy because today tumekuwa na wanafunzi wa Pwani University, Karatana University who are with us here. So please, as you go back, ensure that all those students in this case here who are in the universities here, I mean, they join these RCM groups here for purposes of what here? These are help loans. Right? Remember, even if you have the other loan, these are CASNEB RCM help loan. You still qualify. Lucy formula, because of time, I would prefer, Lucy, if you can just watch this video, which I'm going to upload, Lucy, if you don't mind. Just watch this video, which I'm going to upload. You'll be able to see a formula there. Thank you very much. Bye-bye.